Welcome back, Cryptonauts, to another episode of Cryptocurrency Chat. I am your host, Jake Jabarelli, and with me today is my co-host, Blockchain John, who's normally the host. Let's find out how things been, John. How you doing?
Hey, all good, man. Actually, it was an exciting weekend, and I'm getting ready to go on vacation here. And what I did yesterday was I went to there was a Braveland event yesterday, or should I say a Ravencoin event in Braveland. So for those that don't know what Braveland is, just a metaverse for the Ravencoin community. It's a cool place to go hang out. And there's a video. I uploaded a video, 43 minutes long. It is on the C3 Media YouTube channel. Check it out. After that, I went to Super Happy Dev House meetup over in Mountain View. That was another meetup. You know, now that things are starting to open up here in the Bay Area in California, that was like the first in-person meetup, and there was a lot of people out there. So there's another video I uploaded of what was going on. It was just a bunch of people trying to just getting together, just networking, just like the old days, man. It felt good meeting up with a bunch of fellow cool people, you know.
Yeah, that's awesome. I'm glad you had those opportunities before you take off on yet another adventure. So, yeah, for me, it's been very busy in the office. Lots of things going on, and I don't want to talk about it. It's just financial woes, I guess, is the best way to put it, without having to go into great detail. But hey, you know, the market's up, and that's a great segue into what we are typically doing at this time of the show, which is talking about the current market. At the top 10, CoinGecko sponsored, well, not sponsored, it's just CoinGecko, who we use to read you the top 10 coin stats of the day. Do you want to do that today, or you want me to do it?
Scissors, rocks. Ready?
All right.
Scissors, rocks. Oh, okay.
Scissors.
Got papers.
All right, I guess I'm doing it.
All right.
I still think we should do, how was it? Rock, paper, scissors, lizard, Spock. But anyways.
Okay, nice.
Yeah, exactly.
Okay.
Maybe in the future. Okay, so starting with CoinGecko, I just did a refresh here. And, of course, Bitcoin is on the top, as it always is and always has been. And I can't say that's always going to be the truth. So we'll see in the future if something takes over Bitcoin's dominant position, which is currently 39% of the entire market. 46,496 and 67 US dollars, 0.67 US dollars. A 4.5% week-long gain to a market cap of $883.5 billion. Got a funny looking little dragon over the last 7 days if you guys are watching us on YouTube. Ethereum at 3501.89 in US dollars. It's at 11.5% gain. Holy crow, that's quite a bit more. It's more than double what Bitcoin's gain has been in the last week, to a $421.0 billion market cap. And just so you know, that's 18.6% of the current market. Tether, it's just a stable coin, hasn't really moved very much, as it almost never does. And its market cap is currently $82.5 billion. Although I'd like to point out that the 24-hour volume of Tether, which is very typically very high, is $50 billion compared to Bitcoin's 18 and Ethereum's 12 billion. Binance Coin, or BNB, is currently at 448.22, a 7.8% week-long gain, and a $75.4 billion market cap. USD Coin is currently at 5th position. It is also a stable coin, doesn't move very much either. It is currently a market cap of $51.7 billion with only a $2.9 billion volume, quite a bit lower than all the others, although Binance was lower than that. Solana is currently in 6th position at 136.05, a 33.8% 7-day gain. Oh my goodness, that is insane. $44.3 billion. A Precision 7, which is Ripple and is also in the news today, 0.84 US dollars, and a 1.5% 7-day gain to $40.6 billion market cap. Terra is currently in 8th position at 112.34 US dollars, a 22.9% gain in the last week, which is comparable to Solana. A current market cap of 39.7, hanging out just behind Ripple not even $1 billion behind. It's very close on this relative scale. Cardano in ninth position, the ADA, 1.18 US dollars, a 2.8% week-long gain, and a $37.9 billion market cap. Again, not very far behind Terra. And Avalanche, rounding out the top 10, is currently at $97.11, a 12.8% double-digit gain, and $25.9 billion market cap. And then, as I've often said, 11, 12, 13, and 14, and 15 position, Polkadot is really close behind Avalanche, currently $25.4 billion, which is barely $500 million behind. 11% gain. I'm not going to talk about all of them, but here we got Dogecoin, the Binance Coin, Terra USD, Binance USD, Terra USD, and Shiba Inu are all in the same positions they were last time we read this chart. And so let's head up here to the top and talk about the total market cap, currently 2.61 trillion US dollars, 0.2% 24-hour gain. And if you haven't already, please collect your candies. I don't have this account not signed in, but you can. I'm at about 13,000 candies right now. But that's just because I continue to collect every single day. Every single day I hit the number. I hit the plus 20, plus 30, plus 40, plus 60, plus 100. Each time you remember, you get more until it resets. And you can, of course, use those candies for buying all kinds of PDF-based books, or we have NFTs that you can get, and as well as discounts off a number of interesting services. So check out your candies. Make sure to collect them every single day. I know we don't do the podcast every day, so you probably wouldn't remember unless you were watching the show. So it's up to you to get on to CoinGecko and collect your candies. Anyways,
Jake,
go ahead.
Jake, one thing. What I've been noticing is the Bitcoin dominance. Yesterday was at 38%. Today it's at 39%. And Ethereum hasn't really been moving much. It's been settling at about 18 to 20%. Means that the others, the other blockchains have actually been gaining momentum. Yep. And let's see. Let me jump back over to the top 10.
Altcoin Spring.
Maybe BNB, Solana, like you said, Terra, Cardano, Avalanche. Those all those guys are picking up, man. They're picking it up.
Yeah, there's
we'll
quite
happens
a few.
here.
You scroll further down, you can see Near Protocol. They're at 19th position, is almost 30% gain.
Mm-hmm.
What was another one? VeChain is in 34th position, 23.8% gain, and Filecoin. Well, Filecoin's been doing. Filecoin and Waves are both doing 30% plus gains. So yeah, it's definitely an altcoin season out there.
But every year at this time of year, around April, around springtime, or summertime, this is when Bitcoin actually does bounce back up. As a matter of fact, here in a couple of days, the Bitcoin conference is about to start in Miami.
Oh, yeah.
So those that are going, we do have CryptoLissa out there going. She's gonna be supporting C3 Media. That's awesome. And typically, this Bitcoin conference has traditionally been around this time of year. Coincidentally, they picked the right time because years prior, Bitcoin has always bounced back up around this time of year.
Yeah, if we look back here, I'm going to go back here and look at the history of Bitcoin real quick. Put it up on screen. That full 1 year listing of everything that's been going on. If we look at currently, Bitcoin is what, 46,000 at this time last year. Actually, it peaked out. Let's see. We'll look at the chart here. April 14th, it peaked out at about $60,000 last year around this time. If I were to pick the third, which is today, 1 year ago today, we're at $57,000 Bitcoin's value. So it's a little lower, but it is making its comeback. So, yeah. So, I'm not saying for certain, but if Bitcoin follows the same pattern, we will see a rise in September, a drop in the middle of the summer, but a rise again at the end of the year. I don't think it'll happen. It almost never mimics exactly what the previous year did, but we can say for certain there's a lot more hedge funds involved in Bitcoin than there were before, and hedge funds do have tendencies. So we'll just have to see. We know that Bitcoin seems to follow the world news, not just the U.S. news. Anyways, we appreciate if you guys are watching us on YouTube or listening to us on Anchor, and if you are watching us on YouTube, we would appreciate that you give us a thumbs up if you like the content that you are listening to, or watching rather. Hit the notification bell. We post every Wednesday and Sunday, and You can also subscribe if you'd like. You can check us out on Discord. There's always a lot going on there. We have our C3 Media token that you can collect by joining us on Discord. You can also support us on Patreon, as well as through various cryptocurrency formats such as Bitcoin, Ethereum, Binance, BAT, and Raven token. So we appreciate you listening, and we are going to continue on with the news today. So we want to hit the first one there, the BTC miner, or do you want me to go first since I read the beginning, John?
Sure. I got it. No worries. BTC miner prime block to go public through a $1.25 billion SPAC merger. This is written by Dimitar Zanzarov. The U.S.-based cryptocurrency mining and infrastructure startup Prime Blockchain Inc. Prime Block will reportedly become a publicly traded company. The organization plans to merge with a bank check firm in a $1.25 billion deal, including debt. According to a recent Reuters coverage, Bitcoin mining company Prime Block will soon start trading as a publicly traded company on NASDAQ after securing $300 million in equity financing from an affiliate of Cantor Fitzgerald and Company. To go public, Prime Block will merge with 10x Capital Venture Acquisition Corp. 2 VCXA.O. $0.25 billion deal is expected to be completed by the second half of 2022. The head of the combined equity will be Prime Block's Chief Executive Officer, Gaurav Budhrani. The firm's intention to enter NASDAQ via SPAC, Special Purpose Acquisition Companies, merger comes at a time when the U.S. SEC unveiled new rules for such endeavors. The watchdog requires organizations to provide additional details about their compensation, sponsors, conflicts of interest, etc. Prime Block will not be the only Bitcoin mining company listed on the online global marketplace. At the end of 2021, Terra Wolf, another American-based miner, eyed public listing on NASDAQ through a business merger with the tech company Iconics Corporation. Some of the giants in the field, like Marathon Digital and Riot Blockchain, have already listed their shares for public trading. The former trades under the ticker MARA, and the price for a single stock hovers around $28 at current price levels. Riot Blockchain, RIOT, trades at approximately $20.
How do you feel about these big mining companies going public and or merging?
I think for the people that don't want to get into blockchain, just want to stick with traditional stocks, I think it's an awesome way to get into it, because I looked into Riot Blockchain myself and Marathon, and they're both into crypto, and they both have the different strategies of how they make profits. One of them does, I think it's Marathon does more GPU rentals. Like they rent their storage not their stores. They rent GPU equipment.
Yeah,
and Riot Blockchain actually rents the warehouses. So it's like Marathon is paying Riot to house their GPUs. So there's a win-win for both of them. They have their own business plans. So hey, I think, like I said, going back to it for people that just want to stick traditional stocks, then this is a good way to get into crypto. There's
Well, it's like an ETF, but this is a different version of it. So yeah, you can invest in the company that's making money. From the standpoint of a person who's seriously into crypto and owns his own farm, I would say these are the big boy version of what I'm doing. And because I am 100% on board with the idea of mining for the future, I would say I would be willing to invest in these things. And however you want to view that, the reason I do it is because I have a vested interest in it. So I think this is the future, and even though I'm not particularly... I guess the way I'm looking at it is I would like to be like these guys are eventually. So I'm in favor of this. Full disclosure. No. Continuing on here with this fractal news by a new author. How the $35 million fractal just raised could rock the NFT space. This is an opinion editorial by Wesley Mazamore. You finding it there, John?
Yeah, go ahead.
I just didn't see... Okay, there we go. Maybe the problem is that because Twitch lags behind, if I watch it, I'm not seeing what's happening right now. So, The announcement came on April 1st, but it was no joke. Neither was the amount raised, $35 million USD, a tidy sum. Justin Can dropped a hint of what was ahead for Fractal last month, tweeting, "Yeah, I built Twitch. It has millions of users, and gaming NFTs are way bigger." 10 days before launching the NFT marketplace on December 30th last year, Fractal announced the launch, and by the time it went live, the Fractal Discord had accumulated some 107,000 followers, according to Khan in an interview with GamesBeat. Sorry, it's a funny name. Along with Menlo Park, California-based Andreessen Horowitz, Solana Ventures, Coinbase, Animoca Brands, Play Ventures, and a whole bunch of other names, the founders of Ramp, along with many others, joined the round. Khan, however, took to Twitter to remind stakeholders that the Fractal and NFT community, as well as any startup entrepreneurs looking on, that it's not the size of your seed round, it's what you do with it. Ha ha. Phallic joke. With the crypto market in bloom, with echoes of NASDAQ of the 1990s, it's an important admonition for both crypto investors and startups. Here's what Khan says Fractal has in works with the fresh infusion of private capital raised 3 months from launching. Quote, "Crypto never sleeps." Oh, thank God. I'm so grateful for that. Sorry. "We're building stuff super fast, very product driven. It feels like we're defining how value is going to be created on the internet again. So if you haven't been following along, Fractal is a marketplace for people to buy and sell and discover gaming NFTs. We've been hard at work for the last 3 months. It has been going very well. We've been working with a lot of gaming partners to drop sold-out NFT collections, and have a ton more in the pipeline." And a further press release from Fractal Friday specifies, "Fractal is building a trust layer in the Web3 gaming ecosystem. NFT marketplaces are still the wild, wild west right now, and many teams are failing to deliver on their promises. We are working with the best AA gaming studios with large communities to bring the coolest game experiences to players." End quote. He predicts that over the next decade, blockchain assets will enable a bigger shift in online gaming than the deployment of the Twitch platform did. Khan has set a lofty goal on onboarding some 100 million cryptocurrency users by powering its NFT marketplace for blockchain-supported digital gaming assets. Fractal is powered by the Solana blockchain, a third-generation blockchain that utilizes proof of stake to qualify nodes to validate and secure actions on the network. That allows it a high degree of scalability and the ability to handle a large volume of transactions in a trustless peer-to-peer or P2P network. Its proprietary POS, or proof of stake, method is dubbed Proof of History, or POH, by Solana. Protocols Tomio Geron reported Friday that the Solana's super fast blockchain platform needs a killer app to break out of the mainstream, speculating Fractal's NFT marketplace could be that app. The key to success is in this endeavor is quality. VentureBeat's Dean Takahashi reported Friday that Khan says Fractal carefully vets applications from Web3 games and currently has an acceptance rate of only 5% of applications for their tokens to market on its NFT clearinghouse. Some notable games clearly listing NFTs on Fractal include House of Sparta, real-time strategy, Tiny Colony, multimode, Yaku, racing, and Cinder and Nekoverse, or an MMORPG. So, it's not to say that OpenSea itself hasn't had a lot of things, particularly from the Gala chain and from Decentraland, and actually I think also Mega Cryptopolis. I haven't actually seen anything from Upland on it yet, but it's good to see more NFT exchanges offering gaming items as NFTs. So, But yeah, it's
I think that's going to be the transition though for gaming. I think a lot of gaming companies here, but I would say by the end of the year, if not next year, it's going to be a whole transition into gaming where you're going to be able to get those NFTs. Um, I think that's going to be a big market for the gaming companies.
yeah. No, I'm actually quite excited about it because it's we're finally like realizing what this actually means. Like before, it was oh great, you can put these things we don't really comprehend on this place we don't really comprehend. It's like I there was a huge backlash in the gaming space for traditional games when things like Ubisoft were like, "Hey, you can do this thing where you get a an NFT for doing something in our games that nobody plays." And it was one way they were thinking that they could revamp their games that nobody plays, right? That have low player count or count, just numbers of people in those games. And I completely understand their perspective. They're like, hey, this is an opportunity. They can see what it was. They're in the business. But gamers felt, or a lot of gamers at least, it seems, felt taken aback by this move. They're like, well, what does this really mean to us? Is this just a money grab? Because that's what it seems like what was happening with, art collections in the NFT space on places like OpenSea with, Bored Ape Yacht Club. It seemed too elitist, and there are obviously elitists who play video games, but most gamers are not elitists. Well, I would think they aren't. I guess the point I'm trying to get at is there is a validity or a value and a utility involved in having NFTs, not just because they're pertinent to one particular space, but if you have a company like Ubisoft or even Blizzard that can transfer such things between games, and then of course you can keep those things and sell them to other people when you leave the game. And to me, that's brilliant. To me, it's like having been a very long time World of Warcraft player. You can't really. I mean, you're not explicitly, according to the terms of service, you can't sell your characters. But I think it would be amazing if when you wanted to divest yourself of all the time you spent playing that game, that you could then sell a character or equipment or things that were difficult or impossible to get once you wanted to leave the game. Or for that matter, let's say you died and your family wants to keep your work going on. And it sounds insane now because you're like, oh, come on. When Prince died, his music had value. I'm like, why does one person's version of work not have value and another person's version of work have value? Why?
So correct me if I'm wrong. People do sell their World of Warcraft items, right?
And not legally.
I don't play it.
Not according to the terms of service.
Yeah, but I do recall Mount Gox. Mount Gox initially started as an exchange market specifically for people to trade items on World of Warcraft, either for Bitcoin at the time, or other, I guess, fiat. And then that's where Mount Gox transitioned from just a strictly World of Warcraft exchange market to a Bitcoin and other coins marketplace.
No, I know. I'm not saying it can't be physically done. I mean, you can technically walk into a jewelry store and take all their jewels and not pay them. It's illegal, but it can be done. So, it's something can be done, but shouldn't be done. What I'm saying is, it would be awesome, even if it's not World of Warcraft that does it. Some other game, let's say Final Fantasy, is very popular now too. Where Sony Online Entertainment says, "Hey, we can do this." Yeah, I agree. This is the future of NFTs. Anyways, continuing on with the news. So,
U.S. lawmakers introduced a bill targeted at stablecoins, written by Georgiev. Stablecoins are cryptocurrencies that usually peg 1-to-1 to fiat currencies like the U.S. dollar. Every stablecoin in circulation, supposedly there should be a $1 bill or its equivalent as redeemable in the reserves. The rising concerns regarding the security of stablecoins has caught lawmakers' attention. Of course, this doesn't apply to USDT. According to the release by Senator Hergetty's office, the newly introduced bill would require stablecoins to be backed by government securities with maturities less than 12 months or US dollars requires stablecoins issuers to publicly release audited reports of the reserves that are executed by third-party auditors. The so-called Stablecoin Transparency Act is a clear indicator that American lawmakers are stepping up to hold the $180 billion industry in accountability and transparency. I actually like that idea, but there's always a loophole or an earmark
Exactly.
installed in
Exactly.
those acts. So let's continue on and see what happens here. Transparency regarding stablecoins issuers has been a growing issue in the industry as Tether, the centralized entity that issued USDT, has been called out for its deliberate concealments over the reserve status. As outlined in the release, the bill would equip regulatory bodies with the power to regulate the stablecoin industry out of existence or to impose onerous requirements on stablecoin issuers. Representative Hollingsworth. So when they say they're not going to do that, most likely that's what they're trying to do.
Exactly.
Representative Hollingsworth revealed that the purpose of the bill was not to stifle technology innovations. It's always the opposite. And that the bill would give the industry an idea of what the regulatory compliances would be like in the future. Tether, the largest stablecoin by market cap, has been caught in a series of criticism due to its lack of transparency regarding the status of its reserve. USDT is supposedly backed by the basket of liquid assets, yet the company has failed to disclose where the commercial papers come from on multiple occasions due to privacy concerns. As of last July, it came to be a controversy that Circle, the company behind USDC, only held 61% of reserves in cash and cash equivalents, according to a report by Grant Thornton. A month later, Circle made a U turn by aggressively converting its reserve entirely to cash and short durations U.S. Treasuries, a move that aimed to reassure that USDC community. As reported by Crypto Potato, Circle would hold its roughly $50 billion worth of reserves with the Bank of New York Mellon, one of the oldest banks in America. Well, good for you, USDC. And I personally, DC, yeah, USDT. I stay away from USDC. What I use.
I can see why. It's like, you know that if you have, let's say, a small branch bank of a much larger bank, let's say Wells Fargo or B of A, that's Bank of America, those don't live here. Bank of America, any of these larger banks in the U.S., the local branches do not keep on hand enough cash to cash out every single account they have. It's just not something that the U.S. demands that they have. And so I can see why Circle will be like, well, we'll keep 60% of $180 billion on hand at all times, because that's ridiculous. But they did turn tail and change. Like, okay, well, we'll keep it all in hand. But I mean, it's
If
because
I'm not mistaken,
it's a security, right?
Circle, I think, is trying to follow regulations. Is trying to get
Yep.
is trying to be more connected with the government and trying to do things more in a compliant way so they can be utilized by government agencies in the future. Is what I'm looking at. They've really been pushing a lot for government backed support.
Yep. Yeah. And I'm and
USDT on the other end is absolutely not. They're trying to just they're not really being compliant with American governments. I don't maybe other countries, but not American governments. Um, and there's just been a lot of question marks about what USDT has been doing
mhm.
with their funds because it sounds like, from what I recall, it was like 20 to 30% of actual cash. So it's like fractional reserves. Just pretty much what's the difference from USDT to the actual dollar.
Yeah.
It,
But I mean,
no.
I thought the main reason of having stablecoins within the crypto market was because you could transfer them and not run into the regulatory issues that the U.S. dollar has. If you're trying to move a couple $1 million between a non-stable coin like Bitcoin and a stable coin like USDT, trying to move that much cash to U.S. dollars themselves is challenging, to say the least. And so, people who are trading, particularly those who are trading on places like Coinbase on a regular basis, even if it's a bot trade, it's an attempt to I mean, if you tried to trade U.S. dollars, you have tons of regulation. I get their reasoning. Just if they're going to call it a security, or if it's going to be called a security, they need to follow the same rules that securities follow. So, continuing on. With the news, Arthur Hayes gives his end-of-year prediction for Ethereum price. Well, I thought Ethereum was going to change in June, not in December. For the former BitMEX CEO explained, or rather, the former BitMEX CEO explained to his readers why in 2022 will be a big year for Ethereum. He considers that the network, after its transition to proof-of-stake consensus, will function as a commodity-linked bond. In contrast, the former CEO called Bitcoin pure money that intrinsically yields nothing. Hayes sees Ethereum, I don't know why, but I guess he owns a lot of it. By the way, this is George Georgiev, I forgot to mention. Hayes sees Ethereum as an investment better than not only Bitcoin, but other L1 protocols, which are mostly overvalued. Plus, the transition scheduled to occur in the summer of this year will be the game changer that puts Ethereum ahead of its competitors. Arthur Hayes, the co-founder of BitMEX, which we already said, didn't shy away from this deep conviction on Ethereum. In the most recent blog post, he stated that the target allocation for 2022 will be 25% Bitcoin and 75% ETH. We shall see. This came after the prior allocation at 50% BTC and 50% ETH at the beginning of this year. Hayes has made such an adjustment partly because he saw Bitcoin as money, while the post-merged ETH as a commodity-linked bond, which we again already said. Quote, ETH is a commodity used to power the computer, not a pure monetary instrument, end quote. In terms of the yield from staking Ethereum, Hayes quoted the analysis completed by Justin Drake, an ETH researcher who projected stakers could see an APR of around 8 to 11.5% after the transition. Hayes outlined that for a 5-year ETH local currency bond, ETH/USD price would have to decline nearly 30% after 5 years, assuming an 11.5% yearly yield for investors to lose money. For hedging the risk of buying this ETH bond, investors can choose to sell a 1-year ETH USD forward futures contract. Hayes wrote, quote, the broker quoted me a mid-market premium of 6.9%. That means to hedge my local currency ETH bond, I actually receive income, end quote. To institutional Bitcoin holders like Michael Saylor, who issued corporate bonds to purchase Bitcoin, Hayes recommended that they should issue debt and purchase Ether instead. The reasoning behind it was he saw at a boring stonk buying ETH will naturally be branded as a metaverse and DeFi company, which can help hype the stock price. Issuing ETH bonds, meanwhile, is a positive carrying trade to the company. Due to the proof-of-stake mechanism being much more environmentally friendly than the proof-of-work mechanism, Hayes argued ETH bonds can attract ESG funds and are immune from regulatory concerns. Well, at least they are right now. Hayes' bullish take on Ethereum also derives from his analysis on major Ethereum killers on the market. Ethereum has the largest number of developers compared to other L1 protocols, while this price-developer ratio shows that Ethereum has the lowest score among all competitors. Quote, Ethereum has approximately 4,000 developers, which is a 3x larger than the chain which the second largest cohort of devs, Polkadot, which has the second largest cohort of devs. Okay. Also, looking at the price to total locked value and price/address ratio, Hayes concluded that Ethereum is the least expensive with concrete performance that positions itself as a great investment against other smart contract platforms. Expecting ETH to significantly outperform any L1 chain that is promoted as faster and cheaper than Ethereum, Hayes has set the price target for Ethereum in 2022 at $10,000. There's obviously a lot of speculative and technical speak in this article, and so if anyone was confused by what was said, well, I apologize. Personally, I disagree with Hayes, but I also disagree partially with his original CEO position. He's to say he's outspoken is an understatement, but to say that he's right is also, well, actually, I would say to say he's right is an overstatement. I'm not saying ETH isn't going to perform, but it's still stupidly expensive. And I know a lot of people have said that when it goes to proof of stake, that cost will come down drastically. But the problem that John and I have said countless times, and I still personally believe, is once you go to proof of stake, there's nothing really blocking the system from having a hostile takeover. So you need proof of work. It's absolutely required.
And I think that's the biggest defense of why there's so much energy consumption being utilized to secure the proof of work mechanism. Being proof of stake, obviously, people are still using electricity, but they're utilizing nodes, and normally big companies that have a lot of money can buy up those nodes for a fraction of the price and pretty much dominate the network.
Yeah.
Unlike with proof of work, well, anybody can jump on the network. And on top of that, by the way, a proof of stake, maybe you need a minimum threshold, like, was it 33 ETH? What was I forgot
32.
what the
It's
minimum
32
was.
ETH. Yeah.
32 ETH? Yeah. I don't think the average person has that right now, but
Nope.
now when it comes to proof of work, anybody can jump into the network.
Yeah. And with one single graphics card, you can jump on and start mining ETH with proof of stake, or proof of work, pardon me, right now. But when it goes fully to proof, pardon me, just a second.
So when it goes to proof of stake, especially when it goes up to $10,000, that's a lot of money. No, that's just corporations at that point that are just going to be buying up the Ethereum
Yeah.
and buying these nodes.
Just to do a quick little run through here, let's see here. The current price of ETH is $3,500 times 32. That's $112,000 if you want to own a node in the new proof of stake ETH network. Like, I don't have that much. I don't even make that much in a year. So how do I
Average person
take?
doesn't.
Yeah, well, a lot of people don't. But I'm just saying, how do you take? I mean, yes, there are a lot of people in the early days of ETH who probably still have a couple 32 or more ETH left in their account. But
But that's putting it into the mindset of people that are already in the network, already in the
Exactly.
crypto bubble.
exactly.
We're talking about future adoption of
Mm-hmm.
trying to integrate or trying to
Yeah.
add more people into the network.
Just as another plug, and I'm probably never going to stop doing this.
Here it comes.
The Dynamo network was always going to offer proof of stake and proof of work indefinitely, until somebody votes it out, if ever. But the reason I think that I like that idea in general was there's no reasonably obvious way to take over the network, because there's always going to be a proof of stake and there's always going to be a proof of work. So if you did manage
But
to take
those-
over
those
50%
are
of both
separated.
of those, you'd so devalue so depreciate the value of your coin that would be no point in doing it.
So from my understanding, those are actually separated networks. One of them's for maintaining data on your local drives, would be the proof of stake network. But for the Dynamo Coin network, for the mining aspect, that would be proof of work.
Right, but I'm just saying that there's no way to overtake the network by buying up more than 50% of both, because you would so devalue the point of the coin that there'd be no point in doing it. So.
Let's see, where are we at? Oh yeah,
Let's see.
Steppen. I remember Steppen. Actually, I've been talking to these guys in Steppen. It blows my mind that these guys are spiked up to 31,000% in just 30 days. So unbelievable. So I talked to these guys actually probably right when they came. It was the first week when they came out, and the entry fee, you got to buy sneakers through the platform in order to utilize Steppen. Which, if you ever used any kind of runners app,
Yep.
that's pretty much what Steppen is, but it's on blockchain. But in order to utilize their network, you got to buy the sneakers, and that's pretty much how they do. That's how they do internal funding. That's how they're
Yep.
able to fund their network,
I appreciate that.
which is nice. But considering that it's in Ethereum, the transaction fee, one's a lot. Considering that it's an ERC20 token, two, actually I think it's an ERC 721, right? I think it's like an NFT. And number two, the price of entry is already high as well. I forgot how much it was. I think it was like $500 or $1,000, something like that. I'm like, I don't know, man. I don't know if I'm gonna. And on top of that, you can only utilize. Oh, my microphone just fell down. Oh no, my microphone. Um, excuse me.
You got to tighten up those
Top of
joints
that,
every
you
now
can.
and then, dude.
Yeah. On top of that, uh, the sneakers only last so long. You can only use them for so many rounds of running. So
Yep.
hopefully you get the most out of your running. And yeah, I'm gonna go ahead and pause and my microphone. I'll be right back.
Yeah, well, it's an interesting idea in general, I guess, to me, because it makes a physical object tied to an NFT within it. You have to own this physical object in order to participate. So in a sense, it's kind of like proof of work, although instead of proof of work in the sense of it being a physical thing, like the shoes will continue to be usable until I guess they physically wear out. And that's technically true of GPUs. GPUs do physically wear out over a period of time. It might be a decade, but they still do wear out. Or they may not become practical anymore. Like with older GPUs that only have 1 or 2 megabytes or gigabytes of RAM on them, you can't use them to mine Ethereum anymore because the DAG file's too large. Yeah, so there's a I don't know if it's a deliberately planned obsolescence, but it's in the sense of buying shoes to participate with this move to earn. You have to continue running in order to earn. But I mean, you could just buy the shoes and hold on to them indefinitely, right?
Which let me tell you right now, the guy that's running the thing, running Steppen, that dude is a huge influencer. And when it comes to just running in a house, this guy is literally running 5Ks a day and doing meetups. So when you're jumping into the Twitch, Twitter Spaces, he's literally talking to everybody in the community with answers on top of his head. He just running. You want the answer to this? Boom, he's able to answer it. So he's very confident in what he's trying to build, and I think that's proof there at 31,000% going up in 30 days. So there he goes. Congratulations to that guy. That actually, let's try to get his name in here. Let's see. I'm sure it's in here somewhere. It's on Binance.
I don't see it in the article.
Let's see his name on there either.
Step official.
Yeah, he's one of the devs.
Yeah, it's a neat
He's one of the
concept. I
devs.
mean, to me, this
Yeah.
is one of the ways that a unique utilization of blockchain. It's not just for money. It has a further purpose, and I really appreciate his intent, if nothing else. It's not like Axie Infinity where you're playing the game, and participating in that manner.
So what people are doing now is you can refurbish. From what I understand, you can refurbish the used shoes.
Mm-hmm.
So once people jump into the network and use their brand new shoes, they'll sell them on the secondhand market for either a fraction of the price. But considering that there's a limited amount of shoes that you can purchase, like first generation Jordan, second generation, whatever shoes they have, right? There's only a limited supply of each series of shoes. So if you want a certain series and which can possibly make you have you earn more of the
Exactly, because it's an
Steppen
NFT,
token.
which means if you buy the shoes early enough on, somebody wants those shoes from an earlier set. You're like, "Oh, I happen to own a pair."
They're a little used, but yeah. But guess what? Yeah, those things are selling for even more than what they originally paid for, which is kind of cool, man.
Yeah, it is.
All right, let's go ahead and move on
It's
forward.
natural inflation value. So
So that guy that built the whole gamification on Steppen, awesome stuff.
all right, continue.
Okay,
on
I
here
just want to
with
read the title on this.
Oh, go ahead. Yeah.
I just want to read the title on this. Indian authorities arrest another suspect accused of $160 million crypto fraud case.
Yeah.
Congratulations.
Yeah.
Hey, Indian authorities, you guys did it again. You guys are doing
Good.
wonderful
Glad
things.
you caught
Keep it
another
going.
crypto fraud person. Okay, continue on with Ripple. And this
Ripple. This is Ripple co-founder donates $5 million to environmental campaign against Bitcoin mining. Andrew Thorovalas. Okay, Chris Larson, an angel investor and co-founder of Ripple, is funding an environmental campaign to change Bitcoin's code. Bum bum bum. Using its funds, a consortium of environmental groups will run ads across major newspapers to convince miners, software developers, and others to drop the network's proof-of-work consensus mechanism. To be clear, the environmental lobby seeks to end Bitcoin itself, seeks not to end Bitcoin itself, but to see it shift towards a less energy-intensive security model. Former Sierra Club director Michael Brune who is advising the campaign, claims that Bitcoin is contributing too much to global warming in light of the severity of climate change. Quote, "It's important for anyone in a position to act," he said. As reported by the Wall Street Journal, "You can't ignore that we're in a climate emergency." Bitcoin's proof of work requires networks to compete at solving a highly difficult math problems for permissions to create the next block. The winner is rewarded with newly minted Bitcoin, as well as proceeds from the network's recent transaction fees. To solve the problems fastest, miners must spend more computational energy than their competitors. Overall, the mechanism's purpose is to make it costly for users to propose a block in the first place, incentivizing them to propose blocks in line with the network's rules. The nature of this competition has spurred the growth of Bitcoin mining farms across the globe. These farms, collections of computers purpose-built for Bitcoin mining, cumulatively consumes 136.79 terawatts an hour of electricity per year, more than all of Norway. This has raised concerns among the environmentally conscious in crypto, business, and politics alike, including Chris Larsen. The Ripple co-founder wrote an op-ed last year advocating for Bitcoin to shift to a lower energy validation method. Now he's pledged $5 million to the new campaign against Bitcoin mining, adding that nearly $90 million he's donated to other environmental causes. The campaign will be driven by Greenpeace USA, Environmental Working Group, and others to place ads in publications including New York Times, Politico, and the Wall Street Journal. The ads will call out Bitcoin's environmental impact alongside specific industry leaders and figureheads. Some include Tesla CEO Elon Musk, Block founder Jack Dorsey. Musk began accepting payments for Tesla cars in Bitcoin last year, but ended the program precisely due to environmental concerns. Since then, he has noted Bitcoin mining's greater transition to renewable energy and left the door open to possibly accepting Bitcoin again. On the other hand, figures like Jack Dorsey has been actively working on ways for average people to mine Bitcoin from home. Larson's goal is ambitious, to be sure. He does not believe that more miners moving to renewable energy will be enough. In a thread on the subject, he argues that the incentives of the industry will always lead to some choosing to use oil and coal, which he deems unacceptable. Quote, "Bitcoiners, I know many of you may not believe this, but I'm not trying to work against you here," he stated. However, a code change of such magnitude would be unprecedented for Bitcoin. The network has tradition of upgrading quite rarely and using backward compatible soft forks at that. Multiple Bitcoin hard forks attempts, including Bitcoin Cash and Bitcoin POS, have all failed to compete against the original chain. There are also worthy questions about whether miners would be willing to back an upgrade that negates their entire business model. Larsen proposes that new Bitcoin continues to be distributed to miners freely after the fork, based on a snapshot of the current hash rate before it occurs. Ethereum has also used proof of work consensus mechanisms until now, but plans to move away from it by July. The new mechanism will be proof of stake, which rewards transaction fees for the largest stakers underscore highlight bold of ETH on the chain, rather than the biggest energy consumers. Larsen makes clear that this effort is entirely his own and not on behalf of Ripple.
Oh, okay. So it's
All right.
not Ripple. Okay. They just
No,
titled the
no,
article about that he's the co-founder of Ripple. Okay.
yeah, so he is the pretty much he's leading the campaign, and because he has a lot of money, he can pay people off to make this movement happen. That's pretty much what it comes down to.
Yeah. I mean,
Yeah.
all right. So I'll at least agree with him that I'm not super fond of the immense amount of use of power. I agree with that. But my,
But
my contrast statement to that is, what about all the other industries that use power?
the
Why are they
gaming
not being
industry.
scrutinized?
Oh,
Why doesn't everybody use electricity? Oh, they do?
what about Tesla?
Oh,
Oh,
everybody uses electricity. Is that bad? Is using electricity bad? No, it's actually fucking brilliant. Pardon my French, but it is the thing that makes our society function. There's so many things. Should we get rid of the porn industry because it uses so much power? It uses so much power. People watching videos all the time and using lights to do their shows. And maybe we should get rid of Hollywood because it uses tons of power. What?
Movies.
I guess
YouTube? Oh no.
yeah, gosh, there's so many things that use electricity. They should just stop because they're not doing anything of value. Oh wait, they are. What? What?
When you're talking about a decentralized global currency that nobody can manipulate, I mean, you can. There's, I guess, there's a way to gamify it, but in all sense, being decentralized, really decentralized, that's Bitcoin. Now, the scary thing is that this man does have money. He is going to influence a lot of people, and he is going to push this campaign forward. Now, I believe, with that, undoubtedly, if more people read Satoshi's white paper, which I think true Bitcoiners have read multiple times, all truly support the true Bitcoin proof of work mechanisms and will never ever consider proof of stake. Keep in mind that, say for example, you finally have freedom using Bitcoin. Nations, like for example, we're in the States, we don't really have to really be concerned about that. But there's other, countries where you don't have that freedom with your own finances. But now that Bitcoin exists, you can actually have financial freedom with it. Now, moving over to proof of stake, people like Larson saying, "Hey, I got billions. Guess what? We've already transitioned Bitcoin over to proof of stake. I'm just going to invest $10 billion into buying all these nodes and be able to manipulate the chain by owning 40-50% of the network." That's how what's his name from oh man, I forgot his name.
All right, just describe him rather than talking about who he is.
It was from a like a social media platform that was on blockchain, and
Library
a while.
Minds.
No, it was before Mines. It was like one of the originals.
Okay, but your point is that somebody bought up all the coin, or all the blockchain
and then
that was involved with it, and then he could do whatever he wanted with it because he owned it all.
And that's pretty much what it did. He changed a lot of the game features within the social media platform that was on blockchain. A lot of people from the community got really upset, ended up forking off the chain and creating their own token and their own network and moved away from it.
Yep.
So he pretty much just burned his own bridge with the community.
Exactly. So yes, I'm not 100% certain that Larson would actually try to own the entire thing. He might try to take a serious chunk of it. There have been people within other large companies out there who have decided that they didn't like the way that the CEO was doing the work that they were doing, and so they got a bunch of their buddies together, bought up a majority share or majority stake in that company, and they said, "This is now ours, and we need you to leave." And it's happened. So it's a hostile takeover, but it's absolutely possible. And they even demonstrated that in a DAO recently. So where somebody voted themselves all 95% of all the coins in the DAO and then sold them. So it's like the whole point. I mean, it's almost like checks and balances within the U.S. government. The whole point of having proof of work is that anyone can control it, and it is fully decentralized. The more we go towards centralization, the more we get away from the whole point of Bitcoin.
Steam it.
Steam it? Oh, yes, I remember. Yep. So,
all right.
It's a forewarning. Continuing on with the news, we're going to go to the Intel Arc article here. Intel Arc GPU Moore's Law and Crypto Mining in 2022. This article from Wesley Messamore. Intel's new gaming chip is now available on laptops, and it's being hailed by some of the crypto industry as a major disruption to the crypto mining hash race. Here's a short primer on Moore's Law from Intel. Quote, in 1965, Gordon Moore made a prediction that would set the pace for a modern digital revolution. From careful observation of an emerging trend, Moore extrapolated that computing would dramatically increase in power and decrease in relative cost at an exponential pace, end quote. Will the inexorable march of Moore's Law lead to the swift democratization of hash power in cryptocurrency networks? with home gaming computers and consoles making massive earnings, spinning away at the Shaw 256 questions when they're not busy casually visually lush and simulated environments for players to go pew pew. Perhaps yes. Here's what we're at on the consumer gaming hash power curve today. The first round of Intel new Arc graphic chips dropped this week, though for now, at least the most powerful new line of graphic processors, the Arc 3s, are out for sale to the mass market. Still, the entry-level line of Arc chips is twice the speed of Intel's integrated Xe graphics processors. PC World's Brad Kakas thusly hailed the arrival of the Santa Clara, California company's new GPU. The graphics card duopoly ended this week. That is between NVIDIA and AMD. For the first time in decades, we're staring at a true three-way battle for gaming supremacy. Yes, Intel makes discrete graphic cards now. Per a recent report, according to their data, Intel ACM G10, previously referred to as the other word salad here, or letter salad rather, DG2512EU, is a 406 millimeter squared in size and has a 21.7 billion transistors. Both values are bigger than AMD's Navi 22 and NVIDIA's GA104, supposedly the main competitors for the Arc GPU. End quote. The GPU wars are heating up now, but the technology is not only useful for incredible video gaming graphics or visualizing roadways for autonomous vehicles, it also plays a pivotal role in the global economics of cryptocurrency industry's ever-going hash race. That's a new word I've never heard anyone say before. The hash race. The hash race. Unless you pony up for an ASIC, an application-specific integrated chip or circuit, custom designed to do nothing more than solve the SHA-256 or any other script hashing problems, or commonly used standard in various proof-of-work mining cryptocurrency core implementations, the most practical consumer solution for mining cryptocurrency at homes is still GPUs. Because of the way graphics processing units, or GPUs, are architected, that's a really weird word, they are faster at solving these problems than CPUs, or otherwise central processing units, since we're intent on spelling the words out. And in cryptocurrency mining, speed is everything. The nodes that keep the blockchain books in order on crypto networks are all in a literal race to be the one to solve the hash problem at some expenditure of electricity and computational cycles, qualifying the winning node to be the one to validate, sign, and place the next block of the transactions on the chain, and award the winning miner a newly minted bit of internet money. It's such a weird way of saying all that, but I guess it makes sense. In the case of Bitcoin, there's a winner every 10 minutes, ever since Satoshi blockchain launched in 2009. But to play, the miner has to have and should secure a device with the minimum system requirements to run a full node. As of last year, there was initially some concern that Intel might build in a crypto mining defeater, such as software lockout to prevent using the chip to process requests from Bitcoin Core. Intel's senior vice presidents Raja Koduri and Roger Chandler put to rest in an interview with Gadget 360, saying they wouldn't block crypto mining on their GPUs. It's not a priority for us, Chandler said. So,
selling
pardon?
GPUs is a priority.
Say one more time. I didn't catch all you said.
Selling GPUs is the priority.
Yes, it's the money. They're interested in the production of the hardware. I don't think this is kind of the way that Bitmain took it when they first started producing ASICs. And there's plenty of other companies out there. Silicon, was it? InnoSilicon was another one. But they're all about building the hardware, or being the Levi of the Levi Strauss, being the Levi of crypto mining. They're like, no, we don't care about the coin. We only care about making the tools for the coin. So
yeah. All right, a
All right,
couple
last
more titles
article.
here.
Okay.
I'm just going to read a couple more titles here. Goldman Sachs is preparing to offer cryptocurrency investments services this year. So we'll see what happens with that.
Jamaica.
Sure, we'll follow up with. Well, yeah, we'll follow with that. Crypto exchange BitMEX fails to acquire German bank. There's a report on that. You guys can read that up. You guys want? That was from 2 days ago. And I will read something quite interesting. Continuing on with CBDCs. Jamaica introduced its CBDC to support those who are financially excluded, written by Dimitar Zanzarov. This was written 2 days ago. The Central Bank of Jamaica doubled down on its plans to design a digital version of its national currency. The institution claimed that the financial product will benefit a considerable percentage of the residents who do not have access to basic monetary services. Jamaica is yet another nation that pursues the launch of a central bank digital currency. In February this year, the central bank announced that everything was ready for the release of the product. The institution even chose a name for its CBDC, Jamdex. In a recent interview, committee chair and deputy governor of the Bank of Jamaica, Natalie Haynes, explains that the purpose of the upcoming digital currency is to aid those Jamaicans who are financially excluded from the monetary network. Quote, we still have a large percentage of the population that remains outside of the formal financial systems, the financially included. What? Okay. The executive further outlined that the launch of Jamdex aims to digitally transform the entire economy of the island nation. In her view, the financial report will be appealing to those who are keen on using electronic methods of payment such as credit and debit cards. The majority of those people had also found the usage of cash to be burdensome or in some cases dangerous, Haynes added. Subsequently, she revealed that the Bank of Jamaica will conduct additional tests on its CBDC during April to ensure fluency in the transactions. The deputy governor raised hopes that all issues will be clear in the next 4 weeks, while Jamdex should be introduced to the broad society in the upcoming months. Once accomplished, the Jamaican digital currency will become the third project in the Caribbean Sea area. The Bahamas launched its Sand Dollar in 2020, while Dcash, introduced in 2021, is the CBDC of the following countries: Antigua and Barbuda, Grenada, St. Kitts and Nevis, St. Lucia, and St. Vincent, and the Grenadines. Earlier this month, the Jamaican government said it will spread awareness and bolster the employment of Jamdex by airdropping $16, equivalent to 2,500 Jamaican dollars, to the first 100,000 citizens who set up a CBDC wallet by after April 1st, which was just started about 2 days ago. So cool. Dr. Nigel Clark, Minister of Finance, said that the initiative's main objective is to encourage locals to use the product as an option to conduct transactions. He added that the government seeks to incentivize businesses to create wallets and incorporate Jamdex in their everyday operations. The more bars, shops, and vendors accept the CBDC, the more widespread its usage will be, Clark surmised. And that's technically how it goes. I mean, what's the point of having a tool if it's not being used, right?
Exactly.
So, wish them all the best.
Yeah. No, I'm grateful that more smaller nations, to some to the majority of the degree that it's happening, is smaller nations are glomming onto the concept of CBDCs. But in a sense, the CBDC concept as a whole, despite it not being decentralized, since obviously it's literally intended to be used by a government, which is not typically decentralized, is not terribly a bad idea. It's nice to see a unified concept utilized. Everybody has some kind of fiat currency in their country, right? Well, for the most part, unless they use the US dollar. But then they get to kind of control their own coin and make it universally accessible. And just because it's the coin used explicitly for Jamaica doesn't mean other people can't buy into it. And I think this gives those countries an opportunity to have outside investment, which they know they want, right? Mm-hmm. It would be nice to have, in my opinion, and maybe I'm just thinking off the top of my head here. I'm not actually thinking about the full ramification of what I'm saying. To have a universal coin that wasn't necessarily Bitcoin, that was accessible and inexpensive to transfer between all countries of the world and could not be controlled by any of them. Now, I know that's the point of Bitcoin, but Bitcoin's value currently fluctuates against all other coins. What I mean is something that was worth one, not $1, not €1, not one, whatever Jamaica's currency is, but just was worth one across all nations. Now, it will never be that way as far as I can tell, unless, in fact, I don't even know if it were, if we became like some kind of, world coin that was just worth one. But how it would have to trade, because each economy is different, right? In fact, this is the thing that kind of weirds me out with the U.S. Every state isn't as wealthy as the next state. California, Texas, Illinois, and New York I'll even include Florida in that. The economies of those 5 states are much larger and much more valuable than that of, let's say, Montana or Nebraska. And I'm not trying to put anybody down. I'm just saying there's a lot more commerce going on in those states than there are in the other smaller, less populated states. And so I would think that the economies of those states would be the way it is and you see it in Europe, right? The French franc and the British pound aren't worth the same. But everybody agreed, at least until the UK left the European Union, that they were going to use the euro. But even still, the local currency, like the Deutsch in Germany, wasn't worth what the euro was worth explicitly. It was worth pretty close to it because Germany was the one that set it up. But the franc in France and the pound in Britain were not always worth 1-to-1 with the euro. So, depending upon the local economy, it's not always going to be the same value. Right? This is why we see in California currently with the gas price hike that the price is anywhere between $5 and $7 in California, and if you go to Pennsylvania, it's like $3.50. Like, why? Oh, it's because their economy's smaller, and it's glaringly obvious. So, the difference with Jamaica or El Salvador or Greece or Japan or China, it's all going to be different.
What's interesting about all these countries starting up their CBDC is that they're technically doing a UBI. No one's saying it, but they're making these nations, these citizens of these nations, dependent on these CBDCs to live. I don't want to say a decent, be able to survive. From what I understand, these nations are. The citizens in these nations are just trying to survive, so they're willing to immediately adopt these CBDCs and utilize the government's money. Mm-hmm. Now, that's a UBI in my opinion. You're getting airdropped. I mean, even the stimuluses that are going out, it's called a stimulus. We've been getting stimulus here in the States for a while now, for a couple years, right?
Yep.
Everyone's been getting stimulus. Yeah. So I mean, that's wouldn't you call that a UBI?
Well, I mean, but
it's not a month to month.
It's not a month to month. If it's not a month to month, it's not a UBI.
Okay,
it's
fine.
It's a introduction to a UBI. That's
yeah,
universal basic income. If you guys don't know what UBI stands for.
I think that's where a lot of these countries are testing out. They're trying to figure out. That's the scary thing about government is that there's always two sides of the sword, of the sword, right? Yeah. There's the good side where we want to try to help you be able to get out of poverty, but at the same time we want to be able to control you more because if you disobey us, we'll just cut you off from your own funds.
Yep.
Now that you're connected to the network, and now we have social credit.
Receiving a UBI wouldn't just depend upon the UBI 100%. They would use it as a supplement. So.
Well, I hope that is an absolute true statement because I truly want to agree with you on that. Yeah. But I think the reality is that people don't think that far ahead and don't truly understand what's going on behind the scenes, behind the curtain, behind behind Oz's curtain.
No, you're right, because maybe I just choose to believe that people are more thoughtful than they actually are. So I want to believe, even if I'm wrong. So, anyways, that's all the news we got for today, and we appreciate if you've gotten this far along in the show. We appreciate that you could give us maybe a thumbs up to help us with the YouTube algorithm and any other format that you're listening on us. We appreciate you're listening to the show to this point, and we just want to remind you that we have a Discord channel as well as a Patreon, and if you would like to donate, as you can see here, actually I'm not showing it, what's the link to the coin tree. There's a whole bunch of different ways of donating, not just the ways I mentioned in the past, and there's a whole bunch of different links we have on our Cointree, which Cointree is explicitly for people who are crypto enabled or crypto favorable. So let's just get to the end point here, and I will. You want to do the outro for us, John, or shall I do it?
Yeah, Jake. Yeah. With that said, Jake, I'm actually heading off to vacation, so it's all you for the cryptonauts out there. Jake is taking over like he has been. He's been doing a great job. But I'm heading over to Mexico. I'll be gone for 2 weeks. I'll try to poke in from time to time. But with that said, cryptonauts, until next time, stack sats and huddle. Adios.